This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of January 24th, 2022, a week that we knew was going to be very volatile and somewhat unpredictable. And so to that end, something we always do that's pretty fun at TF Metals Report, we like to have what we call hat contests. When we know we're entering a period of volatility, everybody puts their guess in as to where prices will finish the week. And the winner this week, definitely deserving of first prize, which is a TF Metals Report silver round. Man, what a crazy week we had. But back on Monday, there was still some hope that we would keep trending upward, though we knew moving into the February contract going off the board, there would be a lot of shenanigans this week, and unfortunately, that's how it turned out. But on Monday, there was still a lot to talk about. One of the things we discussed was a daily chart of COMEX Gold, and here's some of what we discussed that day. Okay, so then let's just wrap up with three charts. We'll give you the full money today, so you can get a real full picture of both gold and silver. Again, very nice green candle today. That is the highest daily close since November the 21st, when we were still up here on 1850. And right before that two-day plunge on the 22nd and 23rd. Very solid move up, still within that channel that I've been drawing for you. And again, well above the moving averages, having tested both the 50-day and the 200-day for support just last week. Sure looks good. I mean, it does. And testing that 1835 to 1840 area for support as well the last couple days and rebounding higher. We'll have to see where we go tomorrow. And obviously, I mean, maybe we've got option expiration still lingering for Wednesday. So we got that hanging over our heads. I mean, our upside might be limited past 1850 into Wednesday. But nonetheless, I mean, this is very solid looking chart. And again, as we discussed over the weekend, RSI just gradually trending, mainly slightly higher, but mainly just maintaining between 50 and 60 this whole time. Since those lows around 1760 to 1780 back in the middle of December. So we've gone in 5 weeks, we've gone up $60, $70 without even remotely getting overbought. That's pretty solid. That's good stuff. That's what it should look like in an uptrend. Tuesday the 25th brought the beginning of the January FOMC. Gave us a chance to kind of take stock of where we were with things besides gold. And one of the things we talked about that day was the latest chart update for COMEX digital silver. And finally with silver, getting so hard capped last week. Remember that? Came within 1/2 of 1 cent of the 200-day moving average last Friday. And now 3 straight red candles since. Back below its trend line from its May highs of last year to November. Again, below its 200-day, but above its 50-day. Strong, stout support at 22, and hopefully we won't see that again anytime soon. But as you watch tomorrow, first watch that trend line. Where will that be tomorrow? About, I don't know, 24.30 or so? Okay, that'll be an interesting level to watch. But ultimately, we got to get above that 200-day moving average before we can do anything else. Can we get there tomorrow? That's asking a lot. Can we get there by later this week? Well, that's possible. But for tomorrow, let's just watch and see how this goes. Downside support, again, 23.50. And then down there at the 50-day moving average, which is around by tomorrow 23.15 or so. Again, all levels to watch. I'll reiterate all this in tomorrow morning's post, just so that we're all on the same page. January 26th brought the conclusion of the latest FOMC meeting, and all anybody wanted to talk about was how the Fed was now going to hike rates 5 times, and they were going to start to run off the balance sheet. All the same crap they told us in 2009 and again in 2018, and it's all lies again. They might raise rates once, maybe twice. But already the U.S. economy is showing signs of contraction. The main story this year is going to be stagflation. And the Fed policy error, the Fed having to cut rates eventually later this year, resume QE later this year. But that didn't matter on Wednesday. Instead, we just got another massive red candle, the third one of the month, and there's only been 7 trading days so far. It's all part of what we discussed Wednesday, January 26th. Again, I wanted to put on here, I keep mentioning November 22nd. Prior to yesterday, it was the last time open interest was this high. That was the date when they pulled the rug out from us from 1850, dropped us all the way down to 1810. Massive red candle, obviously. Ran a bunch of calls out of the money, as we were moving toward, not at expiration, but moving toward it. Same freaking thing today. Okay, well, the bright side, we're still above the 50-day. We're also still above the 50-day at the close November 22nd. Then look what happened on November 23rd. So I suspect that may be what's coming next. We're going to look tomorrow for some support at the bottom end of this channel. Okay, that's where we found support back in earlier this month. After a massive red candle number 2 on the 6th, that's where we tapped at 1780 on the 7th. So we'll see. I can't imagine between tomorrow and Friday that we're not going to take a stab down here to what, 1805? Try to see if we can find support at the 50-day. That would certainly seem to be what's next. And I can't stress this enough. What's coming later this year is a Fed policy error and a Powell pivot, just like we saw back in November of 2018. It's all part of what I wrote about in this year's Macrocast. It's right there on the TFMR homepage if you haven't read it yet. But this will be a very strong driving force for higher precious metals prices later on this year. Want to compare this time to what we saw back in late 2018. If you don't remember that, if you're not familiar with it, well, that's all part of what we discussed on Thursday, January 27th. So please have a listen. All right. I've mentioned in the Macrocast, and we keep coming back to this, the stock market collapse with the Fed trying to take away the punch bowl, and how that eventually led to the Powell pivot, as they call it now, from back in December of 2018. And what kind of pressure will it take? How far down will things have to fall before we get to that pivot again? Remember I had that chart of financial conditions earlier this week? Remember that one? Maybe that was Monday or Tuesday's podcast. All right, well, anyway, here's the 200-day moving average. Remember, it was the 50-day that the S&P was riding. Well, that's way below the 50-day now. Pretty soon, the 50-day is going to start rolling over. And if it rolls over far enough, death crosses the 200-day, man, that's really going to be trouble. Anyway, we're bouncing off of 4,300 or so again for the every day this week so far, all 4 days this week. That would sure seem to be a key level. This chart doesn't look good. The action today didn't look good either. And if we break down tomorrow, which is entirely possible, I would almost expect that to happen. But, given the way the Federal Reserve Bank of New York and Citadel and BlackRock and everybody else have the ability to go in and manipulate it like they did back on Monday. Remember the massive put seller that turned everything around? I mean, you can't say anything with certainty when you start talking about the stonk market. But if it overwhelms everything tomorrow, and it might, remember that 4,300 level is pretty important. You got all those lows back there in middle of September and early October. If we close down tomorrow, and, really close down. What if they run us for 100 points tomorrow and we close at the lows of the week, down there just above 4,200? Well, there'd be a lot of stock roaches out there that are going to be getting pretty nervous, and we'd be making a lot of progress toward that Fed pivot. So I keep referencing this, this action from 2018. So I thought I'd give you that chart so you can look at the similarities. So here we are. This is the last 12 months currently in the S&P, and you can see well above the 200-day the whole time until about a week ago, okay? If you roll over from here and start making new lows, who knows what's going to happen? And so now look at the same period of time from early 2018 to early 2019. And again, notice the market is this time not well above the 200-day, but riding the 200-day, finding it for support consistently, then making new highs. Almost exactly to what was happening with the 50-day moving average through all of last year. And then it rolled over. Broke down in early October, and then spent really the balance of October and all through November trying to get back above the 200-day moving average. Kind of a little bit like how it has spent this week trying to get back above the 200-day moving average. Then what happened? In early December, the pressure became too much. It fell below again. And then once it took out the lows, see that? How it had come down twice to about 2,600? Once it took out 2,600, it fell to 2,350, 10% in 5 days. And that was when the Fed shit their pants. And you had the plunge protection meeting. That final red candle is Christmas Eve. You had a day off. Then you had that massive green candle. That's December 26th. That's the Powell pivot. Real interest rates started to fall. Gold bottomed and began to rallied all the way through to when the Fed finally started cutting rates in June of 19, and then rallied again into early September, again tacking on 30%? From 1250 maybe to 1580, something like that. So at what point does the pressure get so great that the Fed can't allow the stock market to fall any farther? Well, what was this? This was a 20% decline in 2018. Would it take a 20% decline now back down to 4,000? Well, the main thing, again, like I just got done saying, watch tomorrow. See if we close below 4,300 and, God forbid, close at the lows of the week closer to 4,200. We'll see. And on Friday, January 28th, we finally wrapped up what was a lousy week. We worried that it would be a lousy week, so we knew there was an FOMC meeting in the middle, and the reaction to those as of late has not been too good. And it wasn't very good this week either, but we should have seen it coming. In fact, we did see it coming. If you follow along with these podcasts, you know that last week we discussed the big surge in open interest in COMEX Gold, the way the banks now seem to be using the trade at settlement system to hide spread trades that then they can leg out at the end of the month before contracts expire and influence the markets. We saw this in November, and as you look at the chart accompanying this last segment of this week's podcast, notice how price ran up in November, open interest grew by 20%, the abuse of that trade at settlement system grew as banks put on spreads, and then as we move toward the December contract going off the board at the end of November, the spreads were legged out and price collapsed down to 1785. And what happened this month? Price went up, open interest expanded, the abuse of traded settlement system expanded, and then the spreads were legged out, price collapsed, and here we are again, right back to 1785. But the fundamentals remain strong, and the U.S. economy remains weak. We are definitely in stagflation. That's going to be a big story going forward. And as we wrote in our annual forecast, this isn't surprising that we're still in the same kind of trading action that we saw in 2021. Expect that to continue a little while longer. But once the Fed begins to pivot again, as they did in late 2018, that's when the metals will really shine. That time is coming. So hang in there and just know that the year is not going to wrap up the way it has begun. I can assure you of that. Have a great weekend, everyone. Hope to see you at TF Metals Report sometime soon. And we'll have another one of these podcast summaries for you next week.